Warm welcome to all of you. This is A K Asnani from Smart VRC. Investment fun to fun. Yeah, there may be some ambiguity in the topic, but it's going to be really very interesting. So starting with a poll, for you, driving a car is a fun, whether it's yes or no. So the options are only two, and they are on your screen. Driving a car is a fun, yes or no. It's so simple. So another 5 seconds left. That is pretty interesting. So 67% of the participants do agree that yes, driving is a fun. Car driving is a fun, and 33% say no, it is not a fun. So it depends on individual to individual. And for me, yes, it is a fun. And more about this we will discuss before the end. All right. Thank you very much for giving your verdict. So there will be basically 3 stages we are going to discuss of the investment, and for the sake of convenience, or you can say for the sake of better understanding, I have drawn an analogy with myself. So starting with stage 1. Is a fun. So I started on 5th of January 1989, and the Sensex was 628 points. Yeah, it was only 628 points, and this is how I started. And as happens to every investor, every new investor, rather I should say, we start with IPOs, and I also started with IPO. There was a company with the name of Autopins. Also, there was a company with the name of Uniplus. Maybe most of you may not be able to recall these companies, because I understand that almost more than 80% of you have joined the market after that period. So this is how I started and how it went up. So sharp moment. By 22nd of April 1992, index was touching almost 4,500 points, and that gives a gain of 611% in a matter of only 3 years and 3 months. 3 years and 3 months, 611% surge in Sensex. I have not seen such a sharp upswing in Sensex after that. That was my first experience, and I cannot describe. It is really not possible to describe in words what was the frenzy and how people were accumulating at that point of time. ऐसा मार्केट में कहते थे कि कचरा भी है तो उसको संभाल के रखो, कचरे को भी बेचना नहीं. That was the kind of frenzy in the market. Lot of theories of replacement cost and all those things, and India is going to be the star of the world and whatnot. And that is very much reflected in the Sensex moment. And as you can expect, my own portfolio also vaulted up, and it was almost 10 times. Yes, 10 times. So I was very, very happy, and it was a fun. It was a fun in a sense. Whatever you buy, it goes up, and it goes up very soon and by big gains. So it was really a very good period, especially as you can see the 1 year when the Sensex went up from 1,500 points to 4,500 points. So that was the period I can never forget. And then what followed was like this. By 26th of April 1993, Sensex fell down to 2,000 points. And this is how the Sensex moved. Almost 50%, more than 50% fall within a period of 1 year. Of course, during COVID times, the fall was much steeper. But if you compare the change in share price, the fall in share price of individual scripts, it was way too sharp during this period. We lost very heavily, though it was, even the Sensex level of 2000 was 3 times above where I entered, that is at 628 points, but my portfolio was bleeding. Bleeding means I lost almost 60 to 80% of my capital. Leave apart the profits. So that is the way my portfolio behaved during this post crash, rather as in the post peak time. And I was totally confused in a sense where I went wrong. I used everything in a sense. I used technical analysis. I read some books also on fundamental analysis. But there was no clear-cut strategy. Yes, I confess there was no clear-cut strategy, and I was just enjoying this boom time without understanding. Of course, because I didn't have the experience, this was my first boom, and that too by 611 points. So I didn't get much time to understand. But as it happens with every new investor, I also thought that my picks are excellent and they are doing very well. They were doing better than the index. And so within a short span of 3 years, I thought that I have become expert, but that was not the case. And that was proved when the Sensex fell down almost more than 50% from the peak, and my portfolio crashed like anything. Now, my status was something very similar to this small video.
ऊंचा हवा की ऊंचाइयों में जय महाराष्ट्र, हर हर महादेव, जय बजरंगबली, मला उतरायचं, उतरवा पप्पा, जय महादेव, हर हर महादेव, जय बजरंगबली, पप्पा उतरवा, बाबा, जय बजरंगबली, हर हर महादेव, पप्पा, आजी, बाबा, काका, काकू, काका, मम्मा, थांबा, मम्मा, पप्पा, काका, काकू, काका, काकी, थांबा, थांबा ना.
So this was the video I wanted to share. This was exactly how I felt like when the market was moving up. I was very happy because all my stocks were moving up, and when it fell down, I thought that not only I have wasted 3-4 years in the stock market, but also I have lost the bank fixed deposit returns. Not only that, but I also lost pretty much of my capital. So basically, when I analyzed, I found that most of the time my strategy was chasing the share price, how the share price is moving. I was not much concerned about the company, what the company is doing, but I was more interested in how the share price is moving. It was hardly, I can say 60 to 70%, it was the charts which I was using, and 30 to 40% about the fundamentals. Of course, at that time, I was an amateur. I didn't knew much about the fundamentals, but nevertheless, whatever information, whatever knowledge I had, I applied it. And remember, in those times, there was no internet. So that was all about the fun. And then came the stage 2. And stage 2 is consolidation. And this is what happened after 1993. That is 26th of April 1993. Sensex again started moving up. And then there were many ups and downs. And once it touched 6,000 also. And again, the similar kind of euphoria happened. And this was the time of Y2K, or you can say .com bust. There was a frenzy in .com stocks. I can say IT stocks. And within days, the share price used to move up by 40%, 50%, 100%. Yes, I remember how fast share prices were moving, as if there is no tomorrow. Buy today, whatever you can. So once again, there was a crash, and market fell down by 56%. So as you can see, from 1993, Sensex was 2,000 points, and 2001, it was 2,600 points. During 8 years, more than 8 years, Sensex was up by only 30%. And this time, in this fall, I was pretty, I can say, in a much better position than what I was in 1989 when I started, because I knew what happens if the market crashes. So my portfolio was suitably diversified. And also it was during this period I gained a lot of knowledge. I added qualifications because this stock market fancied me, and there was no other alternatives, because I was very confident, I was very sure that I want a second source of income. So this was the period of consolidation, and this was the period when I tried to identify the right tools for finding out the factors which makes the share price move up. So what I did was I studied annual reports of those companies whose share price have given tremendous returns in the past. So what is there in the annual report? What is the difference between these companies and the other companies? And then there I added qualifications, as I said, because my basic qualification is, before joining the stock market, was B electronics, and then I diversified in a sense. I added qualifications in the as a MBA finance, then ERA from ICFI Hyderabad, and as most of you know, now I'm pursuing Ph.D. So this is how I invested. Then I tried to analyze them through whatever tools available there at that point of time, and read books also authored by stalwart authors, because I wanted to be a fail-proof strategy. Already 11 years have passed, and so I was looking for those people, those investors who have really created wealth for themselves or for the others. So that is how I read books only authored by those people who have created wealth, not only the fundamentals, not only the paper fundamentals. I want the real insights. And then I kept on applying those learnings, tested them, then corrected my tools, sharpened my tools, and then retested. And this process is still going on. Yes, There is no end to learning. Lot of things to be learned, but the thing is, you should learn fast. So during the fall, it was my courage. I kept on holding the stocks, and as has been rightly said by Carlos Slim, hello, courage taught me no matter how bad a crisis gets, any sound investment will eventually pay off. Yes, during this period of consolidation from 1993 to 2001, there were many ups and downs. And in these ups and downs, what I realized is that if the stock is fundamentally sound, then no need to worry. Now, the only thing is how to identify the fundamentally sound stocks. And before the market touched the bottom, that is 2600, before that, about 4-5 months before that, I started Smart Billionaire Picks, and to prove that yes, we can manage a basket of stocks which can outperform the Sensex. It was a very bold move, and unfortunately, immediately after the start of the SBP, market fell by 30% within 4 to 5 months. Within 4 to 5 months, market fell by 30%. So that were testing times. And in SBP, in those times, we used to get the opportunity after every 2 weeks. Yes, after every 14 days only, we got the opportunity to make any changes. So that was a very big challenge. So that was all about the stage 2, that is the consolidation part. And then came the stage 3, and it is again a fun part. Why fun? Because over a period of time, we kept on sharpening our model, kept on sharpening our tools, got more insights, more experience, and our performance kept on improving in SBP. And with every fall, after every fall, whenever the market went up, our portfolio, our basket of stocks went up like anything. Like anything means they performed much better than the underlying index. In this case, it is the Sensex. It became a fun. Even right now, when the markets are, there is no direction, and despite a small fall in Sensex, many of the mid cap and small cap stocks are falling like free pins, and they're falling freely, and people are worried. But ask me, genuinely speaking, of course, I'm not happy with the war going on between Russia and Ukraine, but we get a good opportunity to pick the right stocks. This is the time to concentrate on your portfolio. So how the strategy change in the stage 3? So in the stage 1, I was I was attracted towards the share price movement. And in stage 3, I had the worth of the stock in my hand, and so the share price was moving towards me in a sense. Ultimately, what I learned is, finally, it is the worth of the stock which decides the share price. So my focus should not be on the share price. My focus should be on the worth of the stock. That is the great difference between stage 1 and stage 3. Stage 1 was fun as long as the market was moving up. In stage 3, it is a fun when the market falls down. Yes. And this is truly reflected in our performance in SBP. This blue colored line stands for Smart Billionaire Picks. Investment of 1 lakh has turned to about 1.2526 crores during a period of this 21 years, while the Sensex returns, as you can see, represented by red line, has delivered 1 lakh to 14 lakhs. So that is how I say this has become a fun, F-U-N, big fun. And you can see from here on how the gap between the SBP and Sensex keeps on increasing. So these are the three stages as we have been discussing: small fund, then consolidation, and now the big fund. And this big fund keeps on growing, And the time in the first stage, there was a time when I was very happy when the stock price used to move up because my portfolio was moving up. But now it has little bit changed, and this little bit is very big in a sense. Of course, I am happy when the advice given by us goes up, but I am also more happy when the stock falls, because when the share market, whole market falls, there is a crash-like situation, because that is the time when we get to catch the stocks at very, very low valuations. All these things come when you always think of long term. Think of 2 years, 3 years hence. What we are thinking of is what will happen tomorrow, what will happen day after tomorrow, what will happen in this RBI meeting, what will happen in Fed meeting, and all those things. Think ahead. So that is how we are, as an advisor, as an author of the book Way to Billionaire, how we are different. At Smart VRC, we have a cumulative experience of 71 years. Along with me, Mr. Kishore Purswani, he is looking after, he's the head of marketing, and he has got more experience than me, but he was not very actively involved in this field. But that experience counts, and that is how our cumulative experience of 71 years is a great differentiator. Also, we have the employees for back office work. And one more key differentiator, and that is the utmost importance, is the ability to find the worth of the stock with good accuracy. This is the ultimate thing. If you can find the worth of the stock, even with plus minus 10% accuracy or plus minus 5% accuracy, then nothing better than that. Automatically, you gain the confidence and you gain the conviction. Truly qualified in a sense, not only in terms of the experience, the number of years of experience, not only in terms of the performance of the advice given in the past, but also the academic qualifications. All our advices work in closed loop. So if we have given a buy advice in any of our products, then you will get a sell advice too. Also, we provide the weightage allocation, and this plays a very crucial role in deciding your total returns. So it is not the individual stock return which decides your total returns. It is the allocation made to the individual stocks that decides the total returns. Also, we provide all the advices during the market hours at the ruling share prices. Not that we will give you an advice that when the share price falls to this level, then buy. No, whatever is the ruling price, you buy, and that too during the market hours. And as you all know, SBP has delivered 26% CAGR from last 21 years. We can help you in many ways. As I said, initially at that time when I started, there was no internet, and I was looking for a very good mentor, but I couldn't get it. Otherwise, my learning process could have been shorter. But you people are very fortunate that today there is an internet, there is a lot of websites, it is very easy to locate your mentors and advisors. Of course, finding a good advisor, as I keep on saying, finding a good advisor is more difficult than finding a good stock. So how we can help you? One is, as I said, it takes a pretty long time to get an expertise, to get a mastery in this field. So the one shortest way is to take the help of an advisor, and a good advisor, of course. So we provide stock advisory. Also, those who are more interested in gaining the insights, they can use our product CIPRO, that is Smart Insights Pro. There's a collection of videos, and these are segregated into the 4 categories like financial freedom, equity research, portfolio management, and controlling emotions, which is a very, very important parameter for your success, for deciding your success in the stock market. So these are the small videos. And also I'm an author of the book Way to Billionaire. This book is available in English as well as in Gujarati. Also, we have got free financial freedom calculators available on our website, and website is smartvrc.com. So many of you are aware, we have got WhatsApp groups for investors. Those who are interested, those who are here for the first time, they can send their name and city at this number. This is our WhatsApp number, also appearing on my screen, 9755920780. Also, they can send request for their friends. So the smart word is, don't chase the share price, attract the share price. And this is a very popular and excellent quote by none other than Mr. Peter Lynch. You get recessions, you have stock market declines. If you don't understand that's going to happen, then you are not ready. You won't do well in the market. Yes, slowdowns will be there, crashes would be there. Be prepared for that. Always think which stocks will protect your portfolio if the market falls down further by 25%, 30% from here on. Also, always keep thinking that which are the stocks which will gain the most if the market bounces back by 20% or 30%. That is the way to assess the power of your stocks, or I can say the weakness of your stock portfolio. So now we are going to start question and answer session, and there are 2 ways. Either you can raise your hand through the reaction button, or you can write your query in the chat box. Thank you. So Mr. Prabhakar Rao has asked that, are you providing any training on stock markets? Yes, we do conduct webinars, and before COVID, we used to have an offline webinars, workshops, and after COVID, we have conducted only one workshop. Maybe in times to come, we may conduct online as well as offline workshops, but we have other tools through which you can get a training. Like I said, the Smart Insights Pro videos. Also, we have started new series of smart shorts. Those you can access from our website. These are free. From our website, you can search for your topic of interest under the heading of Smart Insights. Smart Insights is free. Smart Insights Pro has a small subscription pack. How to subscribe to Smart Insights Pro? Okay, again, the related query, let me show you on the website how to do that. So under the products, there is a Smart Insights Pro. When you click here, so here is the demo. Demo is also available. Demo videos are available, and you can subscribe from here. So these are details about the Smart Insights Pro. And regarding the Smart Insights, under Smart Academy, you can click for Smart Insights. And here you can select your category like pearls of wisdom, market, self-help, and smart shots. Accordingly, you can select the video of your choice. No, we don't do. There's a query regarding the portfolio management. No, we don't do any portfolio management. And is there any plan to start any new portfolio service as Smart Millionaire is closed? No, we don't have any plans to start a new basket of stocks. Already there are 2 baskets running. One in Smart Gains, the name of Smart Billionaire Picks, and another one is in Smart Freedom Stocks. Okay, any other query? Mr. Dinesh, kindly unmute yourself.
Sir, good evening, sir.
Good evening.
Sir, like I'm a subscriber of Smart Freedom and Smart Gain, sir, both the products. Like I have a doubt, sir. Like when some stock is recommended, like yeah, the prices also raises within 3-4 days. Like what will be the purchase price we have to fix in fix it, sir? Like whether to follow the same price which you recommend, or like can we have a buffer percentage to buy it, sir?
Okay. Suppose in Smart Billionaire Picks, if I am holding 15 stocks, any stock, if I am holding it, that means it is as good as a buy advice at the current price. It is like this. So you need not have to wait, because if I purchased Bajaj Finance maybe about 6 or 7 years ago, definitely it is almost next to impossible that the share price of Bajaj Finance will reach to those levels. So it is, and presently we are holding it. So it is advisable to buy at the current price. So that is one very kind of a thumb rule, that if I am not ready to buy at the current price, then why I am holding it? So I should sell, like that.
Okay, sir. Okay.
Thank you.
Thank you, sir.
Okay, Mr. Mohit says there.
Good evening, Asnani ji.
Good evening,
Thank you so much for such a nice presentation as always.
Yeah, thank you.
In fact, we follow you and we really admire you. Got such a good experience of looking at those events. I mean, जो आपके तो ये repeat ही है जो आप पहले देख चुके हैं, like जो market condition है आज की date में. So as per your experience, so we understand कि war में uncertainty and we don't know what will happen. But after this situation cools down, like what sector do you say कि ये चल सकते हैं या इनमें अच्छा traction आ सकता है?
Okay. See, ours is a bottoms up approach. So first the company, then the industry, and then the economy. But when we analyze the companies, I mean to say, we have about 175 to 200 stocks at any point of time under our watch list. From that watch list, we can make out which sector stocks are falling more, or which sector stocks are stable, or which are going up even. So from that angle, I believe, I should say that we are very fortunate that during last couple of years, about 8 to 10 technology companies have come out with IPOs, and a couple of them offer an excellent opportunity at the current moment. And these are the companies which can flourish like anything. And after this war, definitely there will be a tremendous pressure on inflation. But then we don't have any other option also. we cannot make exit from stock market and we can go for bank FD, because the returns from the bank FD will be still be way lower than the stocks. So regarding the potential of these technology companies, we are going to come out with a webinar where we will discuss what kind of returns you can expect, because we all know that in IT companies or in technology companies, the money required is not that high, the capital required is not that high. What is required is the intelligence, and we Indians have tremendous intelligence, tremendous knowledge that has been amply proved time and again. And as again and again people are telling that next Google, next Facebook, next Apple should come from India. So if it is like this, then definitely that company has already born, and I see a great potential in one such listed companies in the present scenario. More about this we will cover in our, maybe in a month's time we will have one more webinar, and the kind of returns those stocks can give you is mind-blowing. Yes, definitely there will be some challenges, some kind of risks also, but that can be taken care by having a low weightage. Maybe about 2% weightage will also do reasonably well. And definitely if you lose 2%, then not much loss in your portfolio, but if it gains, then I can tell you it can multiply your portfolio by 10 times. Your portfolio, single stock, your portfolio can multiply by 10 times. That is the kind of potential some stocks have, but those are very limited stocks right now. I hope I answered your query. Yes, Jayaji.
Hi, sir. Good evening.
Good evening. Sorry, I muted you. Kindly unmute yourself once again. Yeah.
Sir, good evening.
Good evening, sir.
Very excited to hear from you next week. The moment you announce something, we all feel really very excited. कि अभी कुछ अच्छा होने वाला है. And we are very hopeful for it, sir.
Yeah.
Sir, and thanks for this webinar also, sir.
Okay.
My query is, sir, how to make differentiation between the low beta and high beta stocks. So what my understanding is where the elasticity of fall or rise in stock is high is called low or high beta stock. So can you please explain us better?
Yeah. Beta means basically how the volatility is related with respect to the index. So if we are talking about ITC, then what is the beta value? It is very near to zero, because it is not moving here and there. If the market is falling, then also there is hardly any change in the stock price of ITC. If it is moving up or down, equivalent to that, it has its own small channel where it moves. So the beta value is very low for ITC. Now coming to the Reliance, it moves almost in line with the Sensex. I mean to say, if the Sensex rises by 5%, Reliance will also rise by 5%. Not exactly, but more or less. So the beta value of Reliance share is unity. Now there are other stocks which move much faster than the Sensex. For them, the beta value is more than unity. More about this you can find on investopedia.com. That will give you a formula how to calculate the correlation, the beta value.
Okay, sir. So among our stock of 18, 7 to 18 in our basket of stock, how do we make out कि कौन से stock की beta value ज़्यादा है या कम है? We should see the elasticity कितना ऊपर गया नीचे गया 3 महीने में 4 महीने में. That way we can. See,
if you are following our advice, then you need not bother about that. We have prepared. We have given the advice and the weightage accordingly. If the beta value is too high, then we have given the weightage pretty less in general. So you don't bother about that. Leave it to us.
Right, sir. Thank you, sir. Thank you very much.
Yeah, thank you. I am very happy to see that you are so charming and you are there is generally, I have seen that people are not, people are very sad because the markets are down. If you are sad because of the war, yes, I do, I'm with you, but not of the stocks.
Yes, sir. One more thing to confess on this forum, sir. Ki I am drawing my ever highest return this year.
Okay,
I am
thank you.
paying ever highest tax this year.
Thank you.
And
Thank you.
it's a very good feeling. Yeah.
Thank you.
Thank you, sir. Thank you. Thank all because of you. Yeah.
Thank you. Thank you. What is the difference between smart gains and smart freedom stocks? Smart gains, we give advice every week, which is the name of that service is pick of the week, and it is a part of smart gains. Basically, smart gains has two parts. One is pick of the week, in which every week we give one advice. Another is smart billionaire picks. The selected stocks from the pick of the week are included in smart billionaire picks, and the changes, if any, are made only on Wednesday. Coming to the smart freedom, it is a basket of good long-term stocks, and changes are made only on an average about once in a month or once in 25 days, something like that. Include something on staying invested rather than selling. Selling is a part of investment. If the story, if you are able to get, if you find a better stock than the existing 15, 16 stocks, then there is no harm in selling the least good stock and including that better stock. Definitely, if you have got a good stock, like we are holding Bajaj Finance from last so many years, we have not exited. When to average? As I keep on saying that you can average if the stock price falls by at least 15% from your last buying price, but kindly ensure that the weightage in your portfolio does not go beyond what we have recommended at the time of advice. Your advisory charges or charges varies from 3,000 rupees to about 8,000 rupees, and you add 18% GST, and these are for 1 year. Any mutual fund advice? As I have shown you, from last 21 years, we have delivered in SBP, we have delivered 26% CAGR. And to my understanding, there is not a single mutual fund which has delivered so high returns for such a long duration. So I don't find any reason that we should go for mutual fund advice also. So this was all about the queries. Okay, Mr. Dinesh Tiwari. Yes, kindly unmute yourself. Yes, sir.
Sir, I have two queries.
Yeah.
So I will ask step by step. So the first one is there is a stock. Since you don't want to anybody to name the stock, so I will quote it as a stock number 1.
Okay.
So if a stock number 1 I bought at your advice, for example, at a price of rupees 900, it went up at say 1,000 plus, and you are asked to book the profit and exit, complete exit. There is advice from you. But the same stock, after few weeks or months, it went to below 700 or 700 levels. So should we buy it again without your advice, or we should stay away from it, from that stock? That is query number 1.
Okay.
And the query number 2, I will ask the query number 2 later, if you allow me.
Okay, sure. So it all depends how much duration has passed. Suppose this happens after 1 year, then definitely I would not recommend you to buy that stock, because in a 1 year there may be, there can be many changes in terms of the performance, and especially during last 2-3 years, as you must have noticed, there are wide-ranging changes, not only in terms of the pricing of the output products, but also the raw material changes, raw material prices. And during last 1.5 months itself, you have seen how the this fuel charges and energy charges have moved up, and also the coal prices. So it is really very difficult to say that yes, you can buy if it falls below 700. But definitely, you must have noticed that we also keep you giving the same advice for the same stock. If the share price falls below a certain, means whenever we find a good margin of safety means what is the worth of the stock and what is the share price ruling. If it is more than 20% or more than 15% even, then also we advise that stock. So it all depends. Means I cannot say blindly that yes, you can buy. And nevertheless, we are always giving you the advices, and in Smart Gains we give 52 advices in a month, and that should be more than sufficient. And also in Multibagger we give about 12 to 15 advices in a year. Moreover, even if you buy on your own, then how you will sell, because whatever the target, the stop loss we are giving, they keep on changing depending on the results and depending on the other factors, external factors.
Yes,
Yeah.
and moreover, it is very difficult to manage more than stocks that you have identified, say 17 or 18.
Yeah.
So if we keep on adding those stocks, then it will go up to maybe 50 or plus.
Yes.
Achha, my
Also,
second query is, sir,
yeah,
related to second query is related to a stock which is a small cap, and its buy price was say 1,000 plus. You never asked to exit it, but its price has gone far low than the advice price, and there was some allocation marked by you. So should we, when it is falling down with a very huge pace, should we buy it more and more or accumulate more, or we should stay away from it, although there is no advice from you to exit, hold, or further increase?
Yeah, see, as I said during the presentation also, if we have given you a buy advice, then definitely there will be a sell advice also from our side. So if you have not received a sell advice, that means it is a hold. And because there is a very high level of volatility, you all will appreciate that there is a very high level of volatility in the present circumstances. So we cannot strictly follow our stop losses. So at times we have reduced the stop losses in Smart Gains as well as in Smart Multibagger. We have reduced the stop losses very steeply in the recent times. So we are always watching the share prices, and we are always aware. We are always updated with the results, updated with the events happening with the concerned companies. And of course, as I said, you can always increase the number of shares, but weightage has to be taken care of. Maybe if suppose we have advised you 4% weightage, and presently the weightage is 4%, but the share price is down by 20% or 25% from our advice price, then I would not recommend you to buy more, because there has to be a certain limit to the risk we can take. So that is what I say. It is a calculated risk. That is how we assign our weightage. But if you are qualified enough, if you have a reasonably good understanding of the risk, always you can change the weightage as per your risk return profile. Yes, Mr. Umesh.
Sir, good evening, sir.
Good evening.
And a lot of learning from your session, sir. So I have one question.
Yeah.
Like, say, I'm a subscription for Smart Multibagger as well as Smart SIP. If the same stock is advised in both the cases, then should we go in for Smart Multibagger and then stop in Smart SIP, or how to go about it?
Yeah, I agree with you. Sometimes it happens that, especially in Smart Freedom and Smart SIP, some stocks are common, and in that case, you follow Smart SIP, because there we have designed the basket with due consideration of all the aspects of diversification in terms of the market cap, in terms of the sector, in terms of weightage, and all those things. If If it is a case that both are the stocks advised in smart multi-bagger and SIP are same, then go with smart SIP vintage.
Okay.
Yeah.
Sure.
Thank you. Thank you.
Thank you, sir.
So with this, we have come to the end of today's presentation. Thank you very much. And also, I'm looking for the suggestions about the topics from your end, so that because it is your program, it is being made for you, and I'm only there to guide you, to help you understand. There may be topics of your interest, but we are not able to appreciate that. That can also be taken. That also we want to take care of. And thank you very much. Thank you.